Have you been afraid to day trade? You've looked at it as something really risky or really confusing. I totally get it. With all that information out there on the internet, it's very hard to believe anybody could be successful at something like this, but also it just feels inherently risky, right? Jamming a bunch of buttons, you're gonna make money out of nothing. Like, how does it work? And will I lose all my money? Guys, I've taught thousands and thousands of traders since 2008 how to day trade professionally. And in today's video, I'm going to talk about a trading strategy you can use very simply to get in and out of stocks, but also to help de-risk some of the process so that you know exactly what you're gonna lose on any particular trade and what you're going to gain, so that you can actually go out and systematize the trading process and start making some profits. Let's get to work. So the pattern that I would use if I was brand new is what we call the first pullback setup. The first pullback setup is a day trading strategy that is very, very simple and involves just a couple indicators that can help guide you through the process so that you know exactly what to do. So when we're trading stocks, I use a 5-minute chart, and what I am looking for the quick pullback setup is at the open and then a pullback to the 9 and 20-day moving average on lower volume. So this setup is about buying a dip on a momentum stock. It is the simplest and cleanest strategy that you can do. But the good thing of why I use this strategy, especially for my new traders, is that you'll know exactly what you can risk on the trade, where you need to put your stop loss, and what you can potentially gain from it. So for example, HIMS is a stock that had a really nice run today. If you look at what it did in the morning, it had a nice thrust about $20.80 and then pulled right back into that 9 EMA around $20.60 to $20.65. When you get a green candle to hold right at that 9 EMA, you're going to buy it and put your stop loss right under it. So when you think about a trade like this, you've got yourself an opportunity to get into a big momentum trade, something that can go up 8, 9, 10%, but you're only risking 5 to 10 cents on it. If you look at the location of the 9 EMA and you put your stop loss right under it, what's your max pain on a stock like this? 10 cents. That's an easy way to de-risk trading, because if you have a picture perfect entry and you're buying right at the 9 EMA after that first thrust, you're gonna get into a hot stock with minimal risk. So if you had 200 shares at $20.65 and you put your stop loss at $20.55, right, you're going to be risking $20 for the potential to make maybe $100 or $200. And that's how you want to trade as a beginner. You want to be able to get yourself in scenarios where you're only risking a handful of dollars to make a few times more than that. And then you want to keep doing that for a period of a handful of months, and then you can up your risk profile as your account grows. When I'm teaching my students, I'm always telling them, let's risk $20, $30, $40, $50 and try to make $100, $200, and then repeat and rinse. And you want to grow your account slowly but surely. It's kind of like if you played a game of heads and tails and you win, you get $200, and if you lose, you give $50. How often would you play that? Well, you'd play it all the time. And trading is very similar. We want to be able to do this type of pattern with minimal risk. And I believe that this type of pullback setup is the easiest way to do it. Now let's take a look at another example. This is a stock called BE. It opens up a little bit under $14 and runs to $14.50. We get a nice 5% pop in the morning. And now look what it starts to do. It starts to pull back into that 1430 area, right into the 9 EMA. When you get a green candle to hold there, Now you're gonna purchase it and put your stop loss right up under it. So a play like BE, for example, if you buy at 14.35 and you put your stop loss at 14.25, if you buy 200 shares, your risk is going to be $20 if you lose, but if it goes up to 15, you might make almost $200. If you wanted to buy 1,000 shares at $14.35, you'd put your stop loss still at 14.25, you're gonna risk $100. By the end of the day, it gets over 15, you have a potential $1,000 of upside for risking 100. This is the best pattern, I believe, for a new trader to learn. You can do this on mid cap or even large cap names. I'd stay away from the pennies because the mid caps are gonna give you a lot of volume, but also a lot of liquidity and a lot of range. Both HIMS and BE trade millions on millions of shares a day, and they have a lot of range, but they're not necessarily penny stocks or small caps. And so it's a great sweet spot to learn and grow your account. Guys, let me know if you have any questions. I'm always there for you.